Time now for Factor Funds, and today we're talking about value. Value funds, Vonnie, have had a pretty rough time. There are some bright spots. Tom Psarofagis joins us now with some details as to what is going on. He's joining us from Bloomberg Intelligence. You were showing me some of the value numbers before we came to air. It's been a very tough time. Walk me through why and whether or not this is going to turn around.
Sure. I think everyone's been waiting for value to turn around. But what I think is really interesting is this sort of talks to how difficult value investing is, right? And we just saw Tepper is returning some money. Cliff Astis is saying how hard it's been. Because when you actually look at value, for example, there is a lot of discrepancy in the way we define value. So we're saying, well, okay, value's done really poorly. But depending on what value fund you actually look at, some might have done actually pretty well this year. So there's actually this, and this is why factor investing is so hard. Not only do you have to get the factor right, you have to get the definition and the way the construction is right. So there's a lot of nuances that go into factor investing.
How big of a difference do the value definitions make, Tom?
They make a huge difference. So let me give you an example. If we look this year in the value category between the top and the bottom performing fund, you have an 11% difference. That's huge. That's the difference between beating the market and lagging the market this year. But we've actually looked at this even historically. On average, the difference is about 15% a year between the top and the bottom performing fund. That's huge because you might actually get the call right. You might say, hey, I'm going to buy value. It's going to do well. But depending on what fund you buy, you might actually have a very different experience than someone who bought another value fund.
OK, let's talk about flows and the struggle that value has in terms of the flows that it sees.
This is, I actually think, is the most interesting part of it, because you've heard all this thing about value now doing so well, it's underperformed for so many years. Flow-wise, if I was to show you the chart and with no labels, value, you wouldn't think that that's actually value because there's so much money going into value funds, which is, I think, is interesting. Yeah. But I think it's because people are trying to hope for a comeback in value. So I think it's just investors trying to catch a bottom in value. And then also I think it's an easier story to tell for advisors. They sort of can sell that value story easier, right? Why not buy cheap stocks? Because eventually they're going to do well. So I think it's just an easier story to tell.
Can be a value trap as well.